current values using credit default swaps and using my assumptions, easily over 400,000 US dollars per Bitcoin in today's market. I think Bitcoin is extremely cheap on a number of metrics, and I'm comfortable buying it at 30,000 because I think that it is so darn cheap. And I use one model that uses credit default swaps. I can use another model that values Bitcoin at over $2 million in today's dollars.
Greg Foss, Bitcoin strategist and partner at Bitcoin Opportunity Fund, delves into the concept of Bitcoin as a credit default swap on sovereign debt and shares his perspective on Bitcoin being the most asymmetric investment opportunity of our lifetime. Additionally, he explores the potential for central bank digital currencies to bolster the adoption of Bitcoin. According to Greg Foss, Bitcoin provides insurance against fiat currency failure. He believes that Bitcoin, the leading crypto asset, is one of the best hard assets available. According to Foss, Bitcoin provides insurance against the failure of a basket of fiat currencies. Foss estimates that there is at least $10 trillion of bank equity globally that can literally be wiped out if the system fails. He said that owning Bitcoin is like having insurance against the failure of a basket of fiat currencies, as the current global bank liability is $200 trillion, while Bitcoin's implied insurance value is around $3.2 trillion. Greg Foss believes that if interest rates are risen much further, particularly if they were to rise above 3%, this could spell doom for the global economy, which would cause a lot more concern for people than if there were runaway inflation, even though both outcomes are bad, and the latter outcome inevitably leads to far greater inequality.
I always take everything from a credit angle. Credit is the most important financial market in the world. It's far bigger than the equity markets. It's far more important. And it also has a prior claim, so it ranks higher in the capital structure. The thesis is based on the fact that the fiat system is inherently unstable because of this debt balloon, okay? And there is an open market contract called a credit default swap, which prices the probability of default of each of these G20 nations. It's an open market, it exists. It's like an open market for insurance. So my thesis takes the debt burden of each country and multiplies it by the insurance value or price, open market insurance price, accumulates it and says, hey, this is what Bitcoin is. It is an insurance contract on all the fiats, right? This is a value. That's what Bitcoin brings to the table. All fiats will eventually fail. There'll be different rates of failure. The USA will likely be the last fiat that fails, but they all fail. Look at history. So you can take those open market insurance rates, multiply it by the debt outstanding, and you can see it's a dynamic measurement, because as the credit default spreads change or the debt burden changes, those two things multiplied together increase the intrinsic value of Bitcoin. You could say, well, what if debt burdens decrease? I'll say they can't, because we've reached the point where the debt spiral is too large. Bitcoin is priced in fiat. Fiat is just a measuring stick. Your house is priced in fiat. The value of your house hasn't really changed, in that shelter still is equally valuable today as it was 30 years ago. The only thing that's happened is the price of that house measured in US dollars has increased because the unit of account, which is the US dollar, has decreased in value on a relative basis. So when we say that Bitcoin is priced in fiat, that's just a measuring stick. But I like to say 1 Bitcoin equals 1 Bitcoin. You know, there will be a time when fiat is actually priced in Bitcoin, not the flip side. And you have to understand that.
According to Foss, $10 trillion could be wiped from banking sector as more banks collapse. Bitcoin insures against U.S. debt crisis. He posted a tweet, the debt ceiling limit will have to be raised again in less than 13 months. Cryptos have become a threat to traditional finances. It is only plausible that governments can stay ahead of the crypto threat. In this case, it is the central bank digital currencies. Foss stated that central bank digital currencies could potentially foster the adoption of Bitcoin. Foss believes that Bitcoin is the best hard asset. He also recognizes the value of gold as an investment. However, Foss advises against selling gold to purchase Bitcoin. According to Foss, if a person doesn't own Bitcoin, they are actually taking on more risk.
Bitcoin market's still too small. In the context of global financial assets, Bitcoin is a very small market, so I think you have to look at other markets for those signals rather than just Bitcoin. But let's talk about the debt ceiling quickly. It is political theater. How many times has it bumped up against the limit and then they fix it only to come back to have to adjust the limit down the road? Now look, I'm betting, it's not certain, but most likely that they do solve the current debt fiasco.
But we're going to printing. I mean, that's
that's fair. But they have to be able to print, essentially. Yeah. Here's the flip side. We're going to be back at the table in less than 8 months because $1.5 trillion will do nothing because that'll get used in less than 6 months. So we're going to be back at the table in less than 6 months negotiating another increase in the debt ceiling. Ridiculous.
How would you see Bitcoin coexisting with a central bank digital currency? Would it?
Great question. So I actually think it'll enhance adoption of Bitcoin because if you have a digital currency on your phone, the government issued digital currency, the extension to buy a Bitcoin digital asset using a wallet that already has digital currencies in it. Pretty simple. Well, how does gold have value? I mean, it's the same sort of thing. Gold has a price because people view it differently. They view it as a store of value. They could view it for industrial use. They could view it for all sorts of different things. There's not just jewelry. That's fair. There's not one single model that comes up with that. There you go. Not large, but is potential. There are many different models that contribute to a market price. And that market price is, you can't argue with it, right? That is the price set by the market at any given time. How did people come up with that valuation? Some people use this model, some people use this model. It doesn't matter. It trades for this price because of a supply demand at that price.
As per Foss' perspective, at a current price of approximately $40,000 per Bitcoin, the Fulcrum Index would indicate that Bitcoin is very cheap to fair value. As such, given that every fixed income portfolio is exposed to sovereign default risk, it would make sense for every fixed income investor to own Bitcoin as default insurance on that portfolio. That wraps up our conversation for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for watching.